Welcome to another episode of Tank Talks, your personal think tank for all things startups and venture capital. I'm your host, Matt Cohen, founder and managing partner at Ripple Ventures. On today's show, we have Boris Wertz, founding partner of Version 1, one of the top early stage investors in North America, to discuss decentralized finance, also known as DeFi, and the future of blockchain and finance. We asked Boris to explain how he originally stumbled his way into the blockchain space and his investment rationale for making early bets on companies like Dapper Labs, famous for launching CryptoKitties and NBA TopShot. We discussed the difference between the last crypto bull run in 2017, fueled by ICOs, versus the recent surge in 2020, known as the DeFi summer. Boris explains how some DeFi platforms like Uniswap and others are generating massive fees without ever being a centralized exchange, and how it can disrupt the exchange industry going forward. We also dig into the very attractive lending fees being generated on platforms like Yearn and Compound that are still in the early stages of adoption. Lastly, we discuss Boris's views on investing globally as a venture fund and how his team has managed to diversify from their original fund thesis, focusing on marketplaces and SaaS, to now focusing on blockchain, climate change, and everything in between. But before we get started today, I wanted to share a personal message about my own experiences when setting up Ripple Ventures' first fund in 2018 that may resonate with some of our listeners. I often speak with other first-time fund managers about their fears and frustrations when it comes to launching your first fund, and the conversation always leads to how I managed to deal with all the administrative hassles that arise when running an investment fund. This is where the team at Adoro Advisors comes into the story. I was lucky enough to meet the founder of Adoro, Bram Ricky, at a VC networking event in New York City at the exact time when I was struggling with my own back office headaches. As soon as Bram told me he had launched Adoro as a tech-first, high-touch fund administrator for emerging managers, I was completely sold. But to provide me with more comfort, Bram mentioned he was previously the former CFO of True Ventures, an extremely successful Valley-based venture fund, which he had left to start Adoro after so many new fund managers were asking for his advice on fund administration. Since my very first interaction with the team at Adoro, all my fund administration tasks have been a breeze. They are the perfect partner for any emerging manager like myself when it comes to supporting you through those initial Fund 1 frustrations. From managing capital calls to LP documentation, all the way to budgets, tax documents, and anything in between, the team at Adoro literally does it all. That is why I'm excited to welcome Adoro as an official partner to Ripple Ventures and now Tank Talks, so other emerging managers can share in the benefits that I've been so fortunate to experience throughout my time as a venture investor. Don't just take it from me, Adoro works with top-tier managers like Lowercase Capital, Homebrew, and Craft Ventures as well. Through their internally developed technology platform called Fund Panel, fund managers and their LPs can access all things fund-related anytime. Listeners of Tank Talks can receive a demo by emailing dev@adoroadvisors.com. That's DEV@adoroadvisors.com and mentioning Tank Talks to get set up today. Now let's get into this week's episode with Boris Wertz, founding partner of Version 1. Thanks for joining us in the tank today, Boris.
Thanks for having me.
So as I mentioned, Boris is the founding partner of Version 1, an early stage venture capital firm focused on backing mission-driven founders. And I'd love to kick things off with a quick background on what DeFi, or decentralized finance, actually is in your mind, and how it came to be a $128 billion market cap industry.
Decentralized finance is kind of an open financial system built on top of the Ethereum ecosystem. Ethereum, as kind of the idea of creating the world's computer, has been around since 2016. But more recently, perhaps in the last 2 years, got really started to use by building applications on top of that Ethereum ecosystem that allowed every financial primitive to be recreated in a decentralized world. And that's everything from debt issuance to options and derivatives platforms, to token and currency exchanges, and to anything else you can imagine a financial system needs.
And maybe, we should go back to before sort of decentralized finance came to be known today and bring it back to around the 2017, 2018 boom of the ICO, the initial coin offering market. That drove a huge bull run and then a 3-year bear market. And for 4 years, the crypto industry has sort of been trying to get back into that bull territory again and finally seems to have gotten there. But can you explain why so few people are still unaware of what the DeFi space is and how it can be utilized, while still some people are making those associations with the crazy betting that happened in the ICO space last time around?
Yeah, 2017 was definitely a big bull run around these initial coin offerings. And that came to a pretty abrupt end, partly because of regulations. People were basically using the Ethereum ecosystem and application to sell securities and equity in projects, and that just wasn't legal. Secondly, there wasn't really a lot of really powerful projects and sustainable projects, so that came to an end. And then it got rebuilt over the crypto winter in a true financial system, decentralized financial system. But ultimately, right now, it's still not in the millions of users that are using DeFi. It's still a relatively limited amount of people that are using it. And it has a bunch of barriers to engage with it. You have to have a decentralized wallet, for example, MetaMask, right? You have to hold cryptocurrencies in the first place to even engage with it. So I think over time, what we're going to see is just the principle of decentralized finance going to go much more mainstream, and more mainstream people will get access to decentralized finance and those ideas.
Yeah, absolutely. I mean, I know when I first got exposed to the, ICO space or even the crypto space in 2014, 2015, it definitely felt like a huge leap of faith just trying to figure out how to even wire like legitimate fiat currency into a ICO offering and then also having to store it on a MetaMask wallet or a cold storage wallet when you actually receive those ERC20 tokens that eventually became listed on some crazy, Asian exchange or something like that. Like there was so many steps that had to be tracked for you to see any type of, let's call it return on investment back then. But now it seems like the pace has exacerbated to way more of a really logical financial industry. But can you tell me where your head was at in like the 2017, 2018 market when you thought about this as a viable investment versus a crazy pie in the sky moonshot investment?
Yeah, I think what we've seen over the years is just the whole crypto space maturing and attracting better and better entrepreneurs. And let me even take a step further back to kind of the original Bitcoin bull run in 2012, 2013. We got interested in that in the crypto space at the time, but we didn't really found a lot of entrepreneurs that were backable. There was a lot of libertarian. It was a little bit even more the wild west than today, and so we didn't really find any opportunities for companies to back. But then 2016 came around, and the notion of the world's computer and Ethereum really caught our attention, because this was the first time to not only think about Bitcoin as a store of value, but as a cryptocurrency that is actually a compute platform, a new type of compute platform that you can build applications on top of. And that really caught our attention back in the days. We kind of sat out the ICO bull run, but we continued to invest in really interesting projects. Celo, which is a protocol to allow remittances between developed countries and developing countries. Dapper Labs, CryptoKitties in the NFT space, that at the time wasn't as evolved as what we see today. And then we started to invest in protocols and companies that were going after financial applications. And at the time, it wasn't even called DeFi. We invested in a company called Nexus Mutual that is building a insurance mutual on the blockchain. We invested in Open, which is building a derivatives and options platform. We invested in Uniswap, which is the leading P2P exchange for tokens and cryptocurrencies built on top of the Ethereum ecosystem. And at the time, we didn't really have a thesis on DeFi, but we found that those all super interesting projects. And then, kind of about a year ago, really that space started to explode. And we had like what we call the DeFi summer of 2020, where suddenly everything was blossoming and coming to fruition. And for the first time, people actually looked at that space as, well, that's the DeFi space, right? And so I think the interesting thing about crypto in general and investing in crypto is it often takes a long time for these things to play out. But when they play out, they obviously are incredibly exciting ideas and that gain traction very quickly.
Yeah, I couldn't agree more. I think the analogy I kind of think about is back in the last dot-com crisis in 2000, there was a ton of human capital being poured into projects that didn't really have viable use cases or market use cases, but they had a lot of human capital going into building the infrastructure layer. And eventually some use cases would bubble up to the top and become viable. And with crypto, we had the same sort of thing happening in, 2015, 2016, 2017. Yes, ICO is the first thing to come out that really caught the world's attention, but it wasn't the most viable use case for the use of the technology. But you saw that there was so much human capital going into building something that eventually something would blossom and become a really usable tool on top of the blockchain infrastructure technology. Is that kind of like the way you viewed the initial tilling of the land?
That's very correct. And it's a great analogy. I think we're in that phase where a lot of infrastructure gets built out. And obviously, given some of the bubbly nature of what is happening, some fortunes will be lost, some fortunes will be won. Many projects will fail, some will win big. But the amount of innovation we're seeing right now, just because it's an interesting space, it's fast moving, the amount of experiments that are being run will benefit long term the whole ecosystem, and will kind of create that infrastructure that we so desperately need to really scale decentralized protocols. I think the narrative around Ethereum, for example, just 2 years ago was it is not scalable, right? And while Ethereum still has scalability challenges, the amount of experiments and projects that are going after making more scalable, if that is layer twos or side chains and what have you, is pretty amazing to see how quickly a community of developers can rally around a challenge and find solutions to it.
Yeah, absolutely. And you touched on this just a moment ago about the DeFi summer. I mean, in 2020, we saw the surge known as the DeFi summer, and it was already evident that the market was much bigger than it was last time around. And now we're seeing, the total value locked in, the TVL, first broke $1 billion in February 2020. It broke $10 billion in September on Ethereum. And now I think we're over 67, 70 billion, quadrupling since January of last year when it was like 15 billion. Have you ever seen a market grow this fast in such a short period of time? And how far do you think it can go?
So I don't think I've ever seen a market grow that fast. I think the word of caution is a little bit that obviously it's also very insular as a growth, right? Long term, what we need to do is bring more people in the ecosystem, making Ethereum and DeFi much more accessible. Right now, obviously, it's the people that believed early into it have brought in a few more people, but that has kind of given kind of fuel to the rise of asset prices, which has created more total value locked in these protocols, which has attracted more people. So it's a flywheel, but it's a very insular flywheel for the moment. And I think that to really get it to the next level and build a truly open financial system, we need to increase the number of users in the ecosystem. The great news is it's just a matter of time until the products and the tools are built out, so it's much more accessible.
Yeah, and I think you and your team at Version 1 are doing a great job of sort of democratizing information and access to the DeFi and the blockchain space. And one of your investments, the Uniswap investment that you mentioned, is doing exactly that. So can we talk about some of the fees and the real money that's being generated on these types of platforms? I mean, we don't have to get into specifics of Uniswap, but I read recently that they're seeing a 7-day average daily fee collection ranging from $1 to $4 million. If we keep seeing these types of hundreds of millions in fees being generated annually, that's a pretty viable business model. How do you think about that? And how should other investors think about it?
Valuing these protocols is still in its infancy, right? And I think a lot of people are still trying to wrap their head around how to look at these fees that are generated. But I think that the basic idea is that in these protocols, people that provide a service to it, right, can earn fees by doing that. And in Uniswap, the service that is being provided is the liquidity for all of these pools and token pairs. And liquidity providers get trading fees in exchange for that. In other protocols, it might be staking and approving transactions that people get fees for. In the insurance use case, Nexus Mutual, it might be by taking specific insurance risks that you get rewards. So it is really a very different business model when you think about there's not an intermediary, a middleman that takes a fee, determines a fee, and keeps the fee by bringing together the two sides of the equation, the two sides of a marketplace. But it's really the community that runs it and people that participate in it that get the fees and the benefit for it.
So let's try to explain it to like, a 6-year-old. If you had 10 million, Canadian dollars and you wanted to exchange them into 10 million American dollars, you would have to go to a bank and they would charge you an FX fee. And depending on how senior of a customer you were, you'd pay a fee and there'd be slippage in that exchange, right? But with Uniswap, if you're exchanging, let's say, US dollars into another cryptocurrency, the slippage is quite minimal for large amounts of volume. And the community is the one that helps build the facilitation of the swap. Is that how you would kind of explain it to someone who never heard of it before?
Very nicely explained. This is exactly what's happening. And I think the power of Uniswap is basically because it's a protocol where anybody can participate and provide liquidity. Anybody can provide liquidity for whatever pair. Nobody has to ask for permission if you want to provide liquidity for a certain token pair, and hence it's really completely scalable in a way that P2P marketplace like eBay is scalable. Anybody can sell anything on eBay if they choose so. Anybody can provide liquidity and open a currency pair, right, on Uniswap, and that's really the powerful tool. You don't have to wait for somebody to accept your token as a listing on your exchange. You don't have to wait for anybody to provide liquidity and be a market maker. Anybody can open a currency token market right away on Uniswap.
It's quite amazing. The first time I used it, I was blown away. And then I've checked out some of the other ones as well. It is an incredible tool. And I'm very impressed with what Hayden's been able to build there in such a short time, as I'm sure you have as an investor. One other area about DeFi that a lot of people are starting to wake up to is the lending space. And I think everyone, even in traditional finance, can understand lending. So can you explain to the audience what DeFi lending on Ethereum actually means? And how people are investing in products with genuine returns and impressive yields on deposits versus just trading and making wild bets and hoping?
So right now, lending was really on DeFi was really started by Compound, and in the meantime, there's other protocols like Aave have done really well. But the idea is really, if I have assets that I hold on, let's say Ethereum or Uniswap as a token, and I want to make productive use of it, I could basically provide them and lend them out, provide them to one of these lending protocols and lend them out and earn returns on top of it. Right now, the real big challenge still in DeFi is that there's no real good credit scores, right? Because everybody has a kind of an anonymous address that they could have created just a moment ago, right? And so the lending doesn't yet work as capital efficiently as in the real world, where you have a credit score, and just based on your credit score, you actually can borrow a lot of money based on your future income or your assets, right? And so in DeFi right now, it's mostly kind of that is happening through kind of a collateralization of your own assets if you're borrowing funds. And it's not yet capital efficient, but it soon will be. And that's an area a lot of people are working on. But the general idea is really that anybody can be a borrower and a lender. And in the same way that Uniswap brings together liquidity providers of different coins and people that want to exchange coins, here it creates kind of a peer-to-peer lending marketplace.
Right. And so the yields that, we're seeing out there, or I'm personally seeing, are in the high teens to low 20% annually. And you can even juice those up with some of the protocol tokens as well that you earn on top of it. Are you personally using any protocols like Curve or Polygon to stake or earn interest on your tokens?
A little bit on, not as a venture fund, but certainly in my own personal sandbox, just to trying it out. Personally, I certainly try out a lot of these things, and it's amazing to see how quickly it has evolved. And obviously, as we said before, it certainly has a few bubbly tendencies right now, but in that process, I think we're really redefining that financial system.
Yeah, for sure. I mean, a lot of people associate us being called Ripple Ventures with the cryptocurrency and that we invest in crypto and do all that. We do not do that at the fund level, but personally, we obviously have our own sandboxes as well. It sounds like you do as well at Version, which is great because you always want to stay ahead of the curve, which you have done very well. And you've made some really exciting investments, as you mentioned, in companies like Open and Nexus, which I'm personally a huge fan of. Can you share why you're so excited about these platforms for the future of financing and lending?
So Nexus Mutual, as I said before, it's a insurance mutual built on a blockchain. And the concept of insurance mutuals have been around for a very long time. The whole idea that members of an insurance provide the capital for the insurance platform. And Nexus is no different, but they do it on a blockchain. And obviously, if you do it on the blockchain, there's a lot of things that are much more scaled, much more efficient, much more productive to use. And so one of the things, for example, they do is if you're a member of the mutual, you can stake your Nexus mutual tokens against certain insurance risk and earn a premium for it. And the idea is that a lot of the early members of the Nexus mutual were people that knew a lot about cryptocurrencies, potential risks of some of these protocols being deployed. And so you really could kind of evaluate insurance risk better than anybody else, and can basically use your Nexus Mutuals token to stake against these insurance risks, right? And so Nexus has developed a bunch of other products over time, and in the long run, you could imagine that they will also insure real world risks, not necessarily just cryptocurrency risks and platform risks in that space, but really real world risk and become a much bigger and broader insurance platform.
Well, I mean, it's in fact the decentralized insurance provider is where we all thought the world should have been a long time ago, but they're doing it in the most risky space, which is blockchain protocols. That's incredible. And Open?
And so Open is basically an option and derivatives platform. And option and derivatives are one of the largest financial categories. And it's pretty clear that we will see a big options and derivatives platform on top of DeFi. And Open is, I think, in the leading position to be that. And obviously, it takes some time to develop that market, as different than Uniswap, where you basically just have pairs of tokens. You have all of that for Open or for any option derivatives marketplace, but you also have puts versus calls. You have different strike prices, different expiration dates. So creating markets is kind of a multitude more difficult than a P2P exchange to organize that for a P2P derivatives and options platform. And that's what they're working on. They've seen some really great traction as of late, but we're very hopeful that they become like a core piece of the DeFi system.
Yeah, for sure. As a personal user, I can say like they are great platforms and a great experience so far in a very burgeoning ecosystem. So congrats on those. I'd like to switch gears though for a sec on a well-known previous investment that just went public, which is Coinbase. So congratulations on that. Your first IPO, I believe, out of the version 1 portfolio. Is that correct?
Yeah, that's correct. I mean, technically a direct listing, no IPO, but yes, first time that a company went to the stock exchange, and obviously a great outcome for version 1 and our investors.
Yes. Well, I will not spend time talking about Coinbase specifically in terms of the investment, but I would love to get your views on how DeFi as a potential competitor is to Coinbase, and do you view it as a competitor versus centralized exchanges like Coinbase and Binance?
First of all, DeFi has actually rivaled centralized exchange in terms of volumes. I mean, Uniswap has I don't know the exact numbers, but it has very quickly caught up to the volumes of centralized exchanges, and obviously is in that respect a competitor to Coinbase. Having said all that, I think centralized exchanges like Coinbase do three things really, really well and will not be rivaled. The first one is to really, as a fiat on-ramp, right, and really get money into the ecosystem. Coinbase plays a central role, really connecting traditional finance and kind of new finance, crypto finance, right? And that role as cryptocurrencies are still a tiny, tiny part of overall finance will be a very central role for years to come, both on the retail side as well as the institutional side. I think the second thing is decentralized exchanges are great for retail traders and some institutional traders, but they obviously don't have the requirements, the regulatory compliance that institutional investors need. Right? So Coinbase has not only a great trading tools, but they also have Coinbase custody, where you can store your crypto assets. And anybody who has ever gone through an audit will understand that there's just no way that any institutional investor will ever hold, or at least for the foreseeable future, hold crypto assets in a decentralized wallet, for all sorts of regulatory and compliance reasons. And then last but not least, I think Coinbase will actually provide tremendous value to DeFi as this is opening up. We just talked about all these opportunities of actually turning your assets, your crypto assets, into productive assets, right? And there is literally tens of millions of customers on Coinbase that have billions of assets on Coinbase in their wallets, right? And at some stage, they all want to participate in lending their assets out, in creating returns for the assets, right? But they don't necessarily want to go to all different places to do so, but do it from their current platform, which is Coinbase, right? And so I think Coinbase in the long run really going to benefit from DeFi. And going to enable a lot of things on DeFi. One underlooked aspect, for example, is also that kind of their acquisition of Bison Trails, which enables staking. Coming back to kind of how can you provide assets, how can you turn your assets into productive assets? Staking is a central piece of that, and Bison Trails enables that for everybody from the retail investor to up to the institutional investor, right? So yeah. I think they're competitive, but in the end, this market going to be very, very large, and they occupy different pieces in the ecosystem.
Yeah, I think if you're like really into the ecosystem for a while, you kind of look at it and say, yeah, Coinbase is a direct competitor to DeFi. But if you're brand new to the ecosystem, first off, they have the brand name, they have the public acknowledgement now. So for a lot of newcomers, where there's still probably 90% a lot of newcomers to the industry, this is the safest and best place to get onto the system. That on-ramp you talk about, they talked about it in the IPO direct listing as well. And I truly believe that there is the need for an on-ramp into this ecosystem. Secondly, if you have to answer to auditors, regulators, or compliance departments, you don't want to be doing it the way that maybe we are in the sandbox. You want to be doing it in a Coinbase environment. And then third, I do agree that Coinbase could be that hybrid solution for DeFi, where they could almost be like the Amazon or the Google, where they have so many different components underneath Coinbase parent that allows you to access some of these, sandboxes or, lending, staking protocol things, but you're still embedded in the Coinbase environment. So you can keep everything under one umbrella. And that provides comfort for a lot of people as well who may be new to the ecosystem. So I completely agree with you. That makes a lot of sense. And another incredible early investment you made, which was CryptoKitties in 2018, which a lot of people must have thought was pretty crazy, in their parent company, Dapper Labs, who is the creator of Flow blockchain, for those who don't know, as well as NBA TopShot. So first off, have you purchased any packs of NBA TopShot personally?
I have, and I'm excited for it to continue to purchase. NBA TopShot has been such a phenomenon that literally I think not a lot of people talked about it back in January, and now it's a marketplace with a run rate of over $500 million a year, and one of the fastest growing marketplaces ever. Right? Back in the days in 2018, obviously we were super excited about kind of a new native behavior and consumer motion of creating these collectibles on the blockchain, and we were fascinated by that. The team behind CryptoKitties always had a much bigger vision of what they wanted to do with that. obviously, when we did the investment, most people only saw CryptoKitties and thought like cute ideas, putting kitties on the blockchain, but where's the investment and where's the opportunity long term? And the team worked incredibly hard for the last 3 years to build out a whole blockchain with Flow. Secondly, actually build out a second franchise on top of it, which is NBA TopShot. And now turning all of that into a platform that will attract other brands, other developers, and with the goal of turning Flow and the Flow ecosystem into the best blockchain for NFTs and collectibles. And I think they're on a great track to do that.
Yeah, I mean, amazing investment, amazing foresight for you. You know, we've gotten to know Roham from our investment in ZenHub and being on the board with him and a co-investor as well as in the fund. It's incredible to see just the endurance that he and his team have had throughout that time. I mean, we all laugh when they clogged up the Ethereum blockchain when CryptoKitties launched originally in 2018. And that's where, the scalability questions all came into effect. But they were seeing past that when they were launching Flow blockchain. But I got to ask, as a GP to GP, how did you explain CryptoKitties to your LPs when you made that investment? Was that difficult?
I don't even remember how exactly we explained to it. I think our LPs have gotten to understand over the years that we sometimes do strange bets that don't really look that obvious, right? Partly I think that has been part of our success, that we invested in categories and themes that weren't really quite clear at the time when we invested in those. And I think they've gotten to trust that not everything works out. Obviously, it's worked out spectacularly well in this one. And I'm pretty sure that there was some head shaking going on behind closed doors, but ultimately, it worked out really well. As bullish we were on CryptoKitties back in the days, I mean, we obviously couldn't have imagined that big of a success. Nobody could have imagined that. Crypto in general, I think, until very recently, a lot of people still looked at it like a toy. It's something that is not credible. And when you talk to traditional investors, tech investors and tech entrepreneurs these days, I think there's still a lot of skepticism around cryptocurrencies and NFTs, and a lot of people feel it's purely a hype and not real much substance. So the skepticism is still around, but I think it's slowly fading away.
Absolutely. I've had a couple of those head shaking moments myself, with our investments in children's stories on Alexa, like VoiceFlow and things like that. But I guess you just have to see through it and know at the end of the day that that's your job to make those kind of far out bets for LPs who may not have the guts to do it. So that's amazing for you on Dapper Labs. One question on the crypto art side. Do you think it's all hype, or do you believe it has long-term viable future?
So it has long-term viable future, but the reality is certainly that the moment you democratize access to a marketplace and let anybody sell their NFT, you're very quickly going to have an oversupply of NFTs and art forms, etc. And so it will play out what is valuable and what is not valuable. I mean, when you look at kind of the traditional art market, there's tremendous amount of artists that participate, but only very few that make a serious living and whose artwork is appreciating in a dramatic fashion over the years, right? And so I think the same thing will obviously play out in the crypto art world. There will be some things that will be tremendously valuable, and some things that will not. And that is only being defined right now. What are the things that will be valuable down the future, and that will be an ongoing process. But in general, the idea that we're creating scarce products, we letting creators go directly to their audiences, we give creators the option to benefit from resales down the road, secondary sales of their creations down the road. The idea of a direct fan engagement, all of that is super powerful ideas. And that is not a hype. That's not a fad. This is like a real innovation around creator economies and will create completely new opportunities for everybody participating in that. But that doesn't mean that every single NFT going to hold up their value and going to be a great investment.
Right. So don't look at the end use case today. Look at the infrastructure, the efficiencies, the democratization of access to a lot of this stuff that's happening. And there will be, 90% of worthless assets, you're saying, but there's still going to be a huge economy that can be built off of all the work that's going into it now.
More than ever, I think it's also interesting to see uh, the value is in the eye of the beholder. I mean, we just had in more traditional finance everything around GameStop. Kind of what is the value of a certain stock, right? Sometimes these things don't get valued in purely financial terms, right? But it's more because people want to be part of it. People want to buy into a meme. People want to be part of a artist journey and career, etc. So I think there's different motions how people define value these days than there was before.
Yeah, it's like, I guess, BitCloud as well. People want to be a part of that ownership of somebody or something, which is really interesting. I've heard you say that your team has a concept at version 1 when thinking about interesting ideas. And one of them is seeing how many skeptics are out there criticizing something that appears gimmicky versus those that are passionate hobbyists. For example, those that criticize the NFT art space were saying, why would you pay for a video of some sports highlight when you can just get it for free on YouTube? Can you explain how your team thinks about these concepts and how you decide on what is a hobbyist type of momentum versus something that actually can be an investment decision?
Yeah, I think it's a great question, and obviously there's no easy answer to that. But I think that whenever you have a new consumer motion, a new behavior, right? You have a lot of people that push back on it, right? And skeptics that push back on that because they're still rooted in their beliefs in the existing consumer behavior. And you had that, listen, it was the internet, it was mobile, it was now decentralized technology. I mean, it's like this is not kind of inherent to just crypto. I think it's probably, you can see it more in crypto just because like the notion of there's digital currencies that are not kind of secured by a government, by a state, by a nation state, I think feels like so ridiculous, more ridiculous than the internet or mobile ever felt, right? So it's inherent to see that. I think it's just important to come back to the second part of the question is like the hobbyists always show you that the hobby where people kind of what people do in their spare time, the hobbies they choose show you a future direction, but it doesn't always mean that this is actually graduating to a real investment theme, right? And in crypto it did, but there's many other areas that it hasn't. For example, when you think about, we had at some stage a theme around do-it-yourself hardware, right? Like you can create your own hardware, and turned out that creating your own hardware is just so incredibly hard that even if a lot of people are interested in it, it's not easy to democratize hardware manufacturing and hardware creation, right? And that theme basically kind of never really took on, right? Even though there was a lot of hobbyists that were excited about it and spending time in that. So I think you have to certainly understand like what is sticking, and is there a fundamental motion where more people can join into that trend because they're interested, but also it's relatively easy to join in.
Yeah, I absolutely love that. It's like if you heard someone explain to you what Bitcoin was in 2010, 11, 12, whatever, and you just took what you had learned from decades prior of gold and finance and fiat currency and said, no, it's impossible, it can't be. But you guys, you take what the skeptics are saying, you hear what the hobbyists and the sort of forward-leaning thinking people are saying, and you kind of converge it all together and make your own thoughts while trying to learn as much as you can along the way, it sounds like, which is honestly what makes you guys such great investors, I have to say. But I got to ask you, right? We've got the Buffetts and Charlie Mungers of the world who are saying that, he doesn't welcome a currency that's so useful to kidnappers and extortionists and so on. Should someone tell him that people use US dollars to do these types of things as well? And how do you think about people's views of these things still today with Bitcoin, and should people be nervous about it?
So I think there are a few things to that. I mean, the first one, which I find a little bit ridiculous, is and kind of one that is being overlooked, is actually Bitcoin is the most, or any cryptocurrency, because it's data on the blockchain that lives on the blockchain, is one of the most transparent ways of kind of looking at payment flows and understanding payment flows. So from that point of view, if I wanted to pay somebody in secret, I would rather use cash than I would ever use Bitcoin, right? And so I think people overlook that continuously. I think the second thing is that is misunderstood when people talk about regulating cryptocurrencies and tokens. These are decentralized protocols. There's nothing to regulate about. They will live on through kind of these miners and in these protocols that there's no way you can stop it. So from that point of view, I just feel there's many good reasons to obviously make it even more transparent, control the influx of money around KYC and all these good things. And I think, like when you look at regulated exchanges like Coinbase, they're already doing all these things, right? But when I hear kind of some of these arguments of we need to stop it, or it's only used for illegal purposes, it's just a clear misunderstanding that A, it can't be stopped. Secondly, it's actually a very transparent mean of paying. And so I don't think people really fully understand what cryptocurrencies are all about.
Yeah, I mean, if they only looked a few inches below the surface, they'd understand what they're saying. Makes absolutely no sense. But hey, I mean, that's what makes it so exciting is that once you convert a lot of those people from understanding or not understanding to understanding, it opens up a much broader market for access to things like this. Switching gears just a little bit here, you started your fund thesis initially focusing on marketplaces and SaaS, and then you transitioned into crypto and life sciences and now climate change. Have you ever been worried about LPs calling out strategy shift at all or anything like that in terms of like how you've sort of switched your focus from one extreme to another?
It's something that we developed a lot of conviction on over the years, what makes version 1 special, right? And I think what makes us special is that we invest in entrepreneurs and in themes that nobody else is investing in, or almost nobody else is investing in, right? And so it's much easier on paper to invest in the repeat entrepreneur that does a startup in a hot space, let's say enterprise SaaS. And you can point to these things and say, like, listen, she has done it before, and this is a hot area with high multiples and a lot of traction. But we think that actually for an early stage fund, it's much more interesting to play in areas and back entrepreneurs that nobody else has conviction in, but us. And that just means that you focus on first-time entrepreneurs often, and that means that you continuously have to get new themes right before they're hot, right? We got crypto obviously right when we started investing in 2016. I think we've done some really interesting investments in climate last year that are starting to mature now. I think that's the internal conviction that you have to develop over time, and that's our investment style. It doesn't mean that's the only investment style that creates returns. It's the investment style that works for us, and I think we have gotten increasingly good at. And so from that point of view, we also kind of reflected that in updated investment thesis in terms of investing in mission-driven founders at the earliest stages. So we're less focused on where founders are building interesting startups. We're more focused on like, why are they doing that? What drives them? How long-term is their vision of what they're building? And we think like that's for us at the early stages much more important than a specific area that they're in.
Well, I guess that's why, you guys say you're focused on mission-driven founders. Doesn't matter what problems they're solving or what areas of the market they're working on. If they're a mission-driven founder that aligns with what you guys are excited about, then it makes its way into the version 1 portfolio, which is amazing. One area you just mentioned that you're really focusing on now is climate investing. And I noticed one of your investments, Sylvia Terra, is absolutely incredible. I mean, the fact that they are able to take maps of every single tree in North America based on satellite data to collect inventory of forestry assets across the continent to build a carbon offset market is just mind-blowing. But it makes so much sense. Can you explain what they're actually planning on doing next with this marketplace to help landowners create offset credits?
Yeah, I think the challenge in the offset credits was always that there was a lack of accountability, right? And so what Sylvia Terra has unlocked with satellite data and mixing in on the ground data is really tracking forestry assets in a very, very detailed way. And that suddenly makes it easier to track commitments that landowners have by after they receive carbon credits, right? And so this idea of unlocking a much more accountable carbon offset exchange was at the core of it. Right now, they're covering U.S. mostly. So the next few opportunities are to get way more landowners on board in the U.S. and then secondly taking the map internationally, right, and really creating those same dynamics of a carbon offset exchange that is being monitored by very detailed satellite data, creating that exchange also on a global basis.
Well, it's absolutely brilliant, and I wish you the best of luck with that investment. It sounds very sticky, too, on both sides of the marketplace, which makes a lot of sense. Last question before we head into the fast favorites round is, you've recently announced in your blog post that you'll be investing globally now rather than just in North America, which seems to be the trend for most North American VCs, given that we're all doing deals over Zoom. What were some of the biggest challenges you faced with doing deals over Zoom over the last year? And how has your due diligence process changed or evolved as a fully remote world is settling in?
Yeah, I mean, listen, it's always a little bit harder to build a personal relationship over Zoom versus in person. Things move quicker. It feels a little bit more transactional. And at the same time, it obviously kind of is such a frictionless process that I think we're going to stick to Zoom investing going forward. There's never been a better opportunity to connect with more entrepreneurs all around the world that are working on incredible opportunities. The due diligence process is just spending more time with them and making sure that we do the right reference checks and we have the right gut checks. But I think Zoom investing has worked out, and it feels like it's on a good track. And it's not only worked out for us, but for almost every VC that I speak to.
Yeah, I couldn't agree more. I mean, I think we've become more efficient with our time, and we've been able to really focus when we had to and kind of get rid of the distractions when they're not really helpful to us as investors. So I'd like to move into our final round, which is our fast favorites, where I'm going to list off 5 things and you're going to answer them one after the other. So 1, what is your favorite podcast? Don't have to say this one.
Invest Like the Best is an amazing podcast. I mean, listen, I love investing. I breathe investing. Learning about investors in all different areas. I obviously, kind of spend a lot of time with other venture investors, but looking at private equity investors, people that have like esoteric assets. It's amazing how efficient and unique capital markets are. And so I love that podcast. And Patrick is just an amazing host with really great questions and a great conversation that he's starting there.
Yeah, definitely is one of the best. Favorite newsletter or blog?
Strategy is from Ben Thompson. I just love that. It's always like the high level concepts of finding out a strategic framework to look at an industry. The funny thing is for us, it's more probably ex posteriori after we invest in a category that that becomes all obvious how it all fits together. But it's a great way to make a lot of sense in a otherwise very noisy world.
Favorite tech gadget?
I just love my phone. That's the only tech gadget I really have, and it's a Google Pixel, and there's nothing super special about it, but man, I just I live on that phone. I couldn't live without it. So
yeah, I know. People always say, I can't believe I spent $1,000 on a phone, but you literally use it every day of your life. If you amortize that over the time you use it, it's crazy. It comes out to pennies. But I hear you. It's definitely one of the best. Favorite new trend?
Favorite or trend? I think the whole trend around creators and the creator economy is just something that I find super powerful. Creators are obviously the web 2.0 hasn't been too good to creators. Often in a free internet that was ad supported, that was dominated by aggregators like Facebook and Google, they haven't really had much opportunity to earn money. And I think what we're seeing right now in the creator economy and decentralized internet, as you just discussed, plays an emerging role in that. I think just completely new ways to go directly to your fans, to monetize directly. But even in Web 2.0, if that is Shopify, if that is Substack, you name it, bunch of new ways of connecting with your audience, doesn't matter how niche it is, and really creating your own business based on that. So, but that's really something I'm super passionate about and I'm very excited about.
Yeah, absolutely. Creators like Cameo and TipJar on Twitter and Patreon, really giving back to the people who are working hard to create more and more stuff for us to enjoy every day is a great thing. And last but not least, your favorite book.
So my favorite book is something that is right now only online, and but soon being finished and being printed. But it's my friend and fellow co-investor Albert Wenger from Union Ventures published World After Capital, and I think it has this thesis of in the industrial age, capital was scarce. In the information age, it's actually not capital anymore, but it's attention, right? And I think it just shifts your focus on actually some of the highest levers and challenges that we need to kind of figure out and kind of think through. It is somebody who has obviously kind of grown up as a teenager and young adult in an industrial age where that was still manufacturing was like the dominant form, and now has his career in the information age and information markets. It's super interesting insights to really flip your focus on what is actually the scarce resource. It's not capital, but it's attention.
That's amazing. I can't wait to get my hands on that book when it officially comes out. Well, thanks for joining us in the tank today, Boris. I really appreciate you sharing your thoughts on DeFi and the future of finance with everyone today. I've been looking forward to having you as a guest on the tank for a while now. So thanks again with Boris Wertz at version 1.
Thanks for the invite. Really enjoyed it.
Thanks for listening. As always, if you enjoyed this episode, please leave a review on Apple, Spotify, or wherever you listen to your podcast. And make sure to give me a follow on Twitter or Clubhouse if you want to be in the audience and ask a question on our next Tank Talk. Till next time.